When are you looking to get back into the market?
So we believe we're going to see some great opportunities in the first half of this year. We think we'll see some opportunities in the first quarter, especially as earnings come out. I think you're going to see a lot of revisions to the downside, and we'll start dollar cost averaging in. But look, the key is patience. We're sitting on a lot of cash coming into this year, our highest cash position we've ever had for clients. And we have the luxury of waiting because you're finally getting paid to sit in cash. And here's why we're still so bearish the first half of this year. We haven't seen any bankruptcies yet. And we're going to, in our opinion, because there's a lot of companies that their stock prices are down 80 or 90%. And when they have to refinance debt this year, they're already in, their debt is already priced significantly lower than what they'll have to refinance for. And who is going to give credit to a companies whose stock price is down 80 or 90%? It's unfortunate reality that happens anytime you have a bubble burst and go into a recession. But those are the cards that we've been dealt. And we have to be able to be patient because those that are, I think, are going to have some amazing opportunities to generate a lot of wealth for their families in the long run.
Are you just waiting for the Federal Reserve to pivot and start to level off interest rates and move them down? Is that what you're waiting for?
I'm not really focusing anymore much on the Fed. Look, too much attention's on the Fed. They've already done enough damage that what we are seeing is going to happen no matter what they do. The Fed will only cut rates when things get really, really bad. So if your thesis is the Fed is going to pivot, then you actually agree with us that things are going to get much, much more worse from an economic and stock price standpoint. I don't see the Fed cutting rates this year. This market has to reset to a new normal of higher interest rates for the foreseeable future. And again, I stress this, I think this is best for the long term. Investors should be able to get paid on cash. The problem is we've been spoiled with low interest rates for so long that it's caused these asset prices to get the levels that are not sustainable under a regime of higher rates. The interest rate market we're in now, it's actually normal. You know, mortgage rates should be at 7%. Money markets should be paying 4 and 5%. We've just been in this delusional world of zero interest rates, and that's not healthy. And it's unfortunate that a lot of people that are still taking a lot of risk are measuring valuations based on zero interest rates. We're not going to see that again, in my opinion, probably in my lifetime.
Eddie Ghabour holding on to his cash still. Eddie, thanks very much for being with us. Happy New Year to you. We'll see you again soon.
Happy New Year.
You got it.